GOOG stock, Alphabet Inc. stock, or Google stock, is currently consolidating within a longer term bearish trend. And the last trading session, the session of the 18th of July 2022, it lost 2.54%, and in this post-market session it is up 0.17%. And we all know very well that it has had that 20-for-1 split. The whole process began, rather the effect began on Friday the 15th, and ultimately yesterday the 18th. That was when everything took place. Shares split 20-for-1 after market close on the 15th of July 2022, and began trading on the split adjusted price of, on the split adjusted price today. Yesterday the 18th of July. So, and the folks at Motley Fool are saying, in general, stock splits are viewed as a positive event within the investment community. Think of it this way: a company's share price wouldn't be high enough to command a split if the company in question weren't executing well and innovating its competition. And down here, they are saying that, like Amazon, the biggest worry for Alphabet is the near-term recession. Is that the near-term recession could derail its core business, since the majority of Alphabet's revenue is derived from advertising, and ad revenue is one of its first things to be hit during a recession. There remains a very real concern that a weakening US/global economy could send shares of this mega cap stock lower, split or not. But also, like Amazon, Alphabet brings its fair share of competitive advantages to the table. For example, data from Global Stats shows that Google has controlled no less than 91% of worldwide internet search over the trading to the 4-month period. Having a practical monopoly on internet search makes it easy for Google parent Alphabet to command top dollar for ad placement. But this is a company that is about far more than just internet search these days. YouTube obviously has become the second most visited social site on the planet, while Google Cloud has grown into the world's number 3 cloud infrastructure service provider. There's a good chance Google Cloud could become Alphabet's leading operating cash flow driver by the midpoint of the decade. So, given all of those things, we can see what's going on here with the stock. We all know that yes, there was this decline that began in actually, for Google, it began in April. Was that not the case? Okay, but this current one we are looking at right now, this decline began in as of the 7th of April. Yes, that was when it all began. But I know for sure that all the way back in March, that was the big sell-off. That was when it all began. But in any case, the pattern here is, on this daily chart, is that the lows are gradually getting higher. You can see that for Google here. This is low as of the 25th of May at 105, adjusted price of 105.46, and then the next one is 106.67. It's getting higher and higher. So that's what the trend is at the moment. And okay, so some of the ratings here, you can see neutral from avoid. But in any case, yes, Google appears to be consolidating within a longer term downtrend. The average directional index, or ADX, is below 20, indicating that the shares have traded sideways recently. However, the 200-day moving average still sloping bearishly lower. It's also outperforming the S&P 500. Momentum for GOG stock is strongly bearish. The 14-period slow stochastic oscillator is falling as investors sell shares and drive the price lower. Yes, it seems that's what's happening. The volume for yesterday, the 18th of July 2022, was heavier than usual, trading 33.247 million shares versus an average of 27.033 million shares per day during the last 12 months. The unbalanced volume indicator is bearish, the slope of the indicator is negative, and suggests that there is a lack of buying interest. So there is a lack of buying interest, but some people are really considering this share split, and they may be gradually picking up the stock. They may be doing so, for obvious reason. The split has provided market participants the opportunity to really get involved with Google. This is an opportunity that hasn't been there for years. So given all of the things that have happened, based on what has happened from the from the 8th of July and up till the 14th, Thursday the 14th of July, we have been able to determine that it has a target of $132.353 that we take it above its 200-day moving average. 130. Okay, let's get that moving average. Let's get the price or the value of that 200-day moving average. That 200-day moving average is at $131.97. So if it does cross over that, but in any case, that's not really something that can happen suddenly. But in any case, that will take it above that. But while that is gradually happening, while the stock is trying to get to that sort of level, the 200-day moving average may also be adjusting. So by the time it crosses over, the value may not be 131, it may be something else completely. But in any case, it's a bullish, it's an ambitious target. We have $132.35. So given all of those things, let's see whether we can plot in near a Fibonacci grid. So we will take this high of 130.71 as of the 19th of July and see what we have. Let's plot that, pick it from here, and then take it all the way down here, and that's what we have. So we can see from here we have various resistances: 111.75, 115.37, 118.33, 121.30. So but our own target is above the 200-day moving average. If we pick it up from here, it will give us something different. So let's erase this, and then use that high, this high of 143.73 as of the 4th of April, and pick it from there. At least it covers our determined target, and that will give us a reference of what we're talking about. So okay, so given all of that, okay, so we have a resistance 100 at 129.31. So that's the closest to our target. So yeah, so see what you make of GOOG stock. It's presenting a buying opportunity, just based on the fact that this split has affected, not because of the broader systemic outlook for the economy and the global economy. So see what you make of GOOG stock, and thank you very much for watching this video.